Well, the ETF market continues to break new records, and total assets under management are on the road to $10 trillion. That's a very big number. So the question is, what's driving this trend, and what other potential factors might continue it? Mike Akins from ETF Action joins us. And Mike, it's great to see you. Welcome back to ETF Guy TV.
Thanks, Ron. It's great to be here. Look forward to sharing a little bit of information about the ETF market today.
Correct. And we usually have you on ETF Battles wearing a different hat. Today, you're going to have a completely different perspective and share with us kind of what you're doing there at ETF Action, as well as how that helps us to understand the fast-moving ETF marketplace. We've seen so many unbelievable things happen this year. Of course, the launch of spot Bitcoin ETFs earlier this year. Then we got spot Ethereum ETFs that have recently launched. But here we are halfway through 2024. Give us a quick update of where we're at in terms of the ETF marketplace.
Yeah, I mean, it's been obviously a very bullish year across the markets in general. So no surprise, flows have been on another record-setting pace. I think year to date, if I hop into our platform here, you can see we've had $504 billion flow into the ETF market. We're up to $9.4 trillion in AUM across about 3,500 different ETFs, 3,500, 550, I think. 3,550 last I checked. So, the ETF market continues to grow at a rapid pace. But as you can tell, a big driver of that is if we just look at, year-to-date returns across all of our different proprietary categories, everything's in the green, right? Obviously, crypto is leading up 50% year-to-date, but you've got multi-asset strategies, equity strategies, non-traditional. It really doesn't matter what you look at. We're in the green year-to-date, which is obviously a good setup for any set of the market. So when I look at the ETF space, I like to break it out across our different categories. So I think one of the things to kind of isolate in before we hop in there is to think about the ETF market and what does it represent, right? So we were just looking at here at the screen, we can see that out of that $9.4 trillion, 77% is inside of equity ETFs, just shy of 18% in fixed income, and then you have pretty small allocations along the rest, but growing allocations, right? Cryptocurrencies there at 0.67%, at $63 billion in crypto, so it's a lot of money that's flowing into them, but it's a very small number relative to the broader market. So, I think from a trend perspective, one of the things we're seeing, and I'm just going to hop into a different screen here. I'm going to go to our navigator in our database. I'm just going to set a filter on inception date so that folks can see a look at the market of what's launched since the start of the year. What's driving new asset launches, flows, etc. So I just set a filter to be, I did 2024. That's not going to work. 2023. So this is every single ETF that's launched since the start of the year. And I think the biggest thing that jumps out to us there's those 11 spot ETFs that we've seen broken down dominate with $60 billion in assets. So obviously that's been a big deal, but from a traditional perspective, we're seeing a lot of equity launches. Non-traditional has been a big deal. The buffer ETFs, as well as the synthetic income ETFs, continue to launch at a really rapid pace. So we're seeing Go ahead.
Yeah, I was gonna ask you, going back to the cryptocurrencies, they've seen such a massive asset boom with investor money flooding in. So do you think that money has that been coming, our investors, where would they have allocated that money before? Would it have been maybe to technology sector funds, or maybe just to the broader equity market? Is the crypto market stealing or taking away money from other areas, or how do you see that?
I think my personal opinion is the vast majority of the money is coming as is coming from existing crypto holders that were accessing it potentially in a less efficient way, and they're looking for a more efficient way to gain access. As we see, if we think about the breakdown of the crypto ETF market, about 83% as of 3/31, the latest 13F filing data, 83% is unknown, meaning it's primarily being driven by retail. As we start to see that unknown number creep up into more institutional ownership, then we'll know we're seeing broader adoption from the financial advisors, from the RIAs in the marketplace. But right now, I think it's primarily new money or a transfer from owning it outright directly to owning it inside of an ETF wrapper.
When do you think we'll see call and put options on some of these spot Bitcoin ETFs? I mean, it's already been, they were launched in January. How long typically does it take after the launch of new ETFs before they start trading options?
Well, so in this case, options can start trading as soon as there's enough liquidity in the underlying, and enough liquidity came through immediately inside the crypto market, right? If you look at IBIT or GBTC or FBTC, all these funds are traded very, very heavily. Like just if we look at, I can add in to my columns here, notional ADV for all this data. Sorry, 1 second. Notional ADV. We can see that these things trade the 11 spot Bitcoin ETFs trade over $131 million a day on the exchanges. Yeah. So there's nothing stopping the options trading market other than the regulators. The regulators have not given the nod to let it go yet. So it's more of a regulator conversation there. I don't think it'll be that much longer, but they do need to receive approval before they can start having options trade on these ETFs.
Yeah, that makes sense. You were talking earlier about the buffered ETF space and, of course, those synthetic ETFs, synthetic income ETFs. Also the single stock ETFs too. Those things have been taking in some assets. Of course, it doesn't hurt when some of those single stocks have been great performers, like the NVIDIAs and the Microsofts and the Apples and so forth. What do you see there?
Well, let's take one at a time here. Let's first look at kind of that non-traditional space, and it's more than just the buffers. I'm gonna go to one of my dashboards here. We call it. By the way, for your audience out there, our dashboards are 100% free. All you got to do is go to etfaction.com, as well as we have a number of additional free tools if you create a free account. But if you go into our dashboards, you don't even need an account. You can track performance and flows across all of our most popular ETF categories. We have one here called non-traditional, and we have 6 different non-traditional categories. Leverage inverse is the oldest and the largest at 117 billion. But you can see synthetic income and buffers now catching up quite quickly with 87 billion in synthetic income. That's your traditional covered calls, put right strategies, as well as 50 billion in those buffer ETFs that cap your gains and losses across ETFs. So let's just take a visual of these categories. What I'm going to do is I'm going to go into full screen on my assets under management. So you can see it a little bit better. I'm going to isolate it down to the last 5 years. And I'm just going to isolate my screen here for your audience to be looking at the 2 largest growing non-traditional categories, right? So if I take that out, basically 10 years ago, there's a handful of synthetic income ETFs, but for all practical purposes, non-existent, right? Just a little over $1 billion in these strategies. And then COVID came along, and I think the ETF market woke up a little bit from an innovation perspective, but also people started getting worried about how far can the market go? Is there a way to get protection? And I think both of these types of strategies, one is an outright protection strategy, right? Buffer ETFs are capping how much loss you can have inside of a strategy. And then synthetic income, when you're writing options on over stock holdings, you're going to have less downside in normal markets because of that premium income you're generating. It's also in bull markets going to definitely limit your upside, but just that looking at that growth is wild. Just in that 5-year time period.
The yellow and the purple here, just distinguish those two for those that have eyes that can't see all of that.
You bet. So the non-traditional synthetic income is in yellow. So that's your covered calls, your put right strategies, your income generating strategies, and your pink or purple, depending on your view on it, there is your buffer ETFs at 50 billion. So you got almost 90 billion in synthetic income and almost 50 billion in. That's as of 7/22. So July 22nd, 2024.
Yeah, that's pretty amazing too, especially when you see market peaking, at least equity markets peaking, that there's an awareness there by investors of the need for protection. And of course, with any sort of correction or a market crash, I think that awareness increases.
Yeah, and I think one of the interesting things within the covered calls space is you're seeing a lot of the single stocks, right? So the second largest, what I did is I just opened up my non-traditional synthetic income grouping here, and it shows all of the composites that these types of strategies fall under. Obviously, your largest is your size and style buckets of U.S. broad-based strategies like the S&P 500, the Qs, Russell 2000, so strategies, writing options to those. But the single stock ETFs are getting very popular as well within covered calls. So YieldMax was the first to launch a series of ETFs that track a single stock. And if I just open this up, you'll be able to see some of them. But we can see, the NVIDIA option income strategy, YieldMax NVIDIA option income strategy, 916 million, right? 791 million in the Tesla. And these things are generating an insane amount of income because of the volatility of a single stock strategy. Of course, with that, you are also increasing much more tracking error, divergence of return from the underlying security itself. And I always warn people, make sure you understand how you're receiving that income and how that income is going to be taxed at the end of the year, because it's not always going to be qualified income that you would expect on a normal 1099.
Makes total sense. Now let's just go to another, because this platform ETF Action has a lot of capabilities. So let's just say that I wanted to compare maybe the sector allocations of two ETFs head to head. So let's just take, for example, SPY versus the triple Qs. Let's say I just wanted to do a sector comparison. How would I do that?
So there's multiple ways to do that on our platform. The fastest, the most traditional way is to go to our ETF database, and you're simply going to want to isolate the strategies you want to compare. So I'm just going to go in and do QQQ, SPY, and set that filter so I'm only looking at those two strategies. Once I have that done, you can access all of our different data. So I'd go into my sector breakdown and I can look at this in a table format, and I'll be able to see, for example, if I slide over to technology, right, the Qs have 51%, SPY 32%. If we want to take a look at that visually, we would just simply click them, go into our compare funds, go into our composition table, look at our equity breakdown composition, and I can now see a more visual representation of that breakdown. Seeing those differences, right? Comm services being 15% of the Qs, just 9% of the S&P 500. Technology, 51.67%, and 32%, which is still very, very high traditionally. If you just wanted to see that graphically, it just brings up that idea. You can always go in, and one of the things to look at is look at over time allocations, right? So if I were to go into my history tools in my home office and look at the S&P 500 as an example, just to illustrate, since we're on topic about sector allocations.
That's actually pretty cool, where you can look at the historical sector allocations.
Yes, if I go into technology here for the S&P 500, right, yep, and I can show, it might look a little better if I make this a line chart, but we can see that ebb and flow, right? And we're obviously setting here at 10-year highs. Low back in 2020, 2018 of just 20%, creeping up all the way to where it sits today at 32.1%. Another great way to look at this is if you stack all the sectors together, and you'll be able to see that if I just highlight technology here, you can see that growth of market share of technology over different time periods, and really get a sense for how much these companies within the larger sectors of the market have been in favor.
Yeah. Let's discuss the folks that maybe want to track a portfolio of ETFs or maybe even build a portfolio of ETFs. I know that you've got some portfolio construction and portfolio tracking tools at ETF Action. Tell us about that.
Yeah, so anybody that our model tools are for premium subscribers, but anybody can come out and look at our sponsored marketplaces. If you come out and go into our sponsored model marketplaces, I'll just go into our ETF Action illustrative models as an example. But what's great about the transparency of the ETF market, but in general, being able to combine any type of strategies where it's single stocks, mutual funds, ETFs, closed-end funds, you name it, and being able to see a portfolio as one. So just as an example, I'll come and use our Alpha 60 strategy as an example. And what you'll be able to see is this strategy currently owns 10 ETFs. You can see all of my allocations across those ETFs. Then what we do is we want to be able to provide people a holistic view of their portfolio relative to a broad benchmark. So if I were to build this out in ETF Action, I currently have this benchmark relative to the global core 60/40. And if I come into my composition tab, I'll be able to see, if I look at my equity, I look very much like my benchmark. I'm actually a little bit under, but what it does is it's going to provide that allocation effect of where is my exposure to different sectors, different countries and markets coming from based on what ETFs I hold.
And how often are these, so you've got these pre-built ETF Action portfolios. How often are these rebalanced?
All of our pre-built models are either rebalanced monthly or quarterly, depending on the strategy. They're all rules-based index models. But our clients can build any model they want, and they can update it whenever they want to make changes to their models, or they can set up their own rebalance frequencies, things of that nature. But from our illustrative models is primarily driven quarterly or monthly, depending on the model they're looking at. It's interesting here. I'll isolate this down to just our beta series, meaning our beta index series basically represents a fully diversified portfolio using the lowest cost ETFs out there, right? So we have allocations across all your major asset classes, including small allocations to commodities. And if I come in here to my performance, what we can see is it's been a very risk-on year, right? So our beta 100 means it's 100% equity. Beta 90 means 90% equity. And obviously, if you're looking at a standard allocation mix, it's been a risk-on year. And we can see the top performing strategies are those strategies with the most allocation to equities.
So really good stuff. Thank you for sharing the your dashboard there at ETF Action, and also for folks that want to that are seeing this video that may want to sign up. Any special things that they should know as they sign up that you want to maybe share with them?
Yeah, I mean, first and foremost is we strive. Our largest clients are institutional investors, financial advisors, financial professionals is, kind of our bread and butter market. But as we continue to grow as a company, we continue to really focus on providing different opportunities for individual investors and do-it-yourself investors out there. So we have done a lot of releases recently that has opened up a large part of our platform to free account holders. So the first thing I'd say is, if you haven't checked it out before, go out to etfaction.com. There's a big orange button in the top right corner that says create free account, no credit card required. And we provide a lot of data and tools absolutely free. If folks are looking for a little bit more of that institutional level data that at a decent price, we do have a DIY subscription level that is only $29 a month. And right now we're actually running a special. If you type in ETF Action 50, when you sign up, you'll get 50% off of that for a year. And so we have a large growing number of individual investors that are using our platform. But our goal is to provide transparency. ETFs themselves are transparency. And our goal is to make the growing ETF market as transparent as possible to navigate.
Love it. Well, thanks for dropping by, Mike. Keep up the good work, and we'll see you soon.
Yeah, Ron, thanks for having me. Have a great day, buddy.
I'm Ron DeLegge with ETF Guide TV. Thanks for watching. We'll catch you on the next episode.